Hi everyone, welcome to a Monday Rapid Fire. Just finished filming the extended market update for the mastermind clients. We went through a myriad of things, and I'd just like to point out I looked through a whole bunch of ideas and reasons and different charts on why we're just having this dip at the moment. Sometimes you can just try and be a bit too clever by half. I think we were sort of thinking at the top of the range, we were going to interact with a lot of leverage, a lot of FOMO leverage traders that want to see this market higher immediately without a range high break. And I think this is the moment to be really, really defensive if we are below range high. And it looks like we've had a flush down again, throwing some fear into the altcoin market. Look, this is pretty typical, and I'm going to say that from experience, where we've seen this multi-month stagnation, malaise, boredom that happens after the halving. It drives people nuts who have heavy altcoin allocations. And I think that's an important distinction. When you decide that you're looking at the low risk like Bitcoin and Ethereum and go out on the risk curve, you are making a decision there, high risk, high reward, or medium risk, medium reward type situation. That does come at a cost. Your emotional health sometimes, if you're not attuned, if you don't know how to, I guess, regulate that kind of feeling and the emotions of this highly volatile market, it can be very problematic. So please identify that as when you go out on the risk curve, you have to accept there are times when the volatility of this market can be soul destroying. But as an investor, if you can lock that away and have that zoomed out, ultra big picture focus, you're going to make a ton of money in this market. But you have to wear these moments where it tests your patience, your concentration, and also your sanity in some respects. And we're not even immune to it either. I mean, you see the choppiness of the market can be uber frustrating. I know I've been really frustrated of late with the chop of the market, trying to trade it because good setups turn to bad setups very, very quickly, and you're just not making money, you're chopping. So it's important to recognize that, step back, realize this isn't the moment to be trading. Trading and getting aggressive in this market is above that all-time high, 74,000. You might get small opportunities, and if you're an experienced trader or you found something that works for you, of course, I'm not saying don't go for it, but just saying for most people watching this, trading is not going to be the way to go here, and it's adding additional risk to the process. Also, that emotional frustration and confusion, which can also bleed into your medium and longer term holdings, and can force you to, I guess, make unforced errors and decisions that you will regret later on. So I wanted to just say all that, and also again looking for some ideas around what was causing this. And I did go into detail with the masterminds, but we do have some very large macro data coming out over the next 2 days. Can't really see a reason why that would affect the markets currently. Just there's a lot of things that are already, we're not learning anything new unless the market is trying to price in, suddenly more bad data or a potential rate cut. I'm just not seeing it there. What I would see far more plausible is we have a hecton, in fact, record futures open interest at the moment on Bitcoin, which means that there is a ton of people going long and short at range high. We don't know which, but funding is also more skewed towards, in terms of the longs are not getting paid to be open right now. It's the shorts. So there is an imbalance there. There's a premium. The longs are paying to stay open. So that generally means that, again, the longs are in for a bit of a rough time of it, and being at range high, you can see that. There is always going to be this volatility around this point. So that's where I'm looking. There's also the idea that the massive funds and ETF flows coming in, you're like, why isn't this affecting the price? Well, this is actually a pretty typical strategy in traditional finance where they can pin the price in place while they accumulate by going short via futures as they accumulate. So we are seeing that kind of data roll in, and maybe this is the new normal when we're at range high, the key pivot point. But just broadly, we saw this last cycle at around that 20,000 mark before we finally broke through. Not to this extreme, but again, there are different, more powerful dynamics at play here. Eventually, we will wear through that supply shock, and then we go higher. So just keep that in mind. Stay positive, have that longer term outlook. Let's have a quick touch on Bitcoin. So you can see here, just super simple. Break range high. This is a huge liquidity pocket or liquidity zone, box, range. We guys call it, wick, rejection. So each time we've butted into it, we're hitting these massive sell walls, and we're getting that rejection to the downside. Nothing to be super concerned about. This is just range bound action, like we went through here, there, everywhere. So if we're going to pull out a Fibonacci retracement of this whole region, we're just coming down to the 0.386, massive volume support here as well. We lose this, then we're coming down to test these moving averages. We'll start to get concerned if we're in that lower band, we're looking weaker and moving through here. just across the board, a lot of the altcoins look pretty flushed at the moment. And the problem is that I see is if Bitcoin, when it coughs, altcoins catch the flu, and if Bitcoin has a massive shit the bed moment, well, altcoins could go down a heck of a lot more. So just keep that in mind, that again, altcoin heavy portfolios are just suffering at the moment. They will do so because of that low liquidity environment. It seems like people are going very defensive right now. So just keep that in mind at range highs. So we really want to break this before we get ultra aggressive. There is, the risk that we can go a little bit lower here. So again, keep that in mind as well. It's always wise to have dry powder on the sidelines. Now, Ethereum, as we head towards the Ethereum spot ETF, it's amazing what a difference 24 hours can make. And I reckon if we were to hear news that tomorrow that the ETF is going to get released back into this week, you watch how quickly this market turns around in terms of interest, liquidity, stables coming back in and cycling through the altcoins. So wanted to paint that picture. But this is very similar to Bitcoin in the respect that we're hitting that sell block, that liquidity zone above. We're just coming back down for a bit of a retracement here. We're having a look at the fibs, coming back down to that 382 as well, just like Bitcoin. So fairly in line, Bitcoin and Ethereum holding up the best across the asset class. So it pays to kind of look, when you're looking to move into these altcoin pairs, you want to be making sure that they are looking like they're going to outperform Bitcoin and Ethereum before you're moving into them. That's a good way to sort of hedge your risk a little bit. Alternatively, longer term investors will just see value in buying, value DCA down, knowing that, over the longer period of time, we're going higher. Ethereum, I'd be very surprised if we do lose, let's say 3,500, but there is the opportunity there to move through some of these moving averages, towards this demand zone. Stoke RSI looks really nice. It's trying to reset here. RSI at the midpoint last time we were sort of in this region was, when we were breaking out here. So interesting. Do we come back down and, flush this right out? Possibly. We'll have to see what Bitcoin does. But broadly, I think it's just sort of, play defensive beneath that 74,000 mark, and anything in here, it's all about positioning, not being too reactionary, not taking too much risk on doing those shorter term trades is going to wreck you. So please keep that in mind. Don't try not to make unforced errors here, get emotional, selling the lows, and then the bet market just bounces back because of crappy liquidity, and then it oscillating around, and then you don't know what to do. I think just have a very clear direction and plan, narrow your focus, try to alleviate the moving parts that you have out there. That is for later on. Right now, it is, just tighten everything up, close the laptop, walk away, have your alert set, and just let it take care of itself. All right, guys, have a wonderful day. I'll catch you again next time. Bye-bye.